All right, guys, this is Kenny Winter with Winter Homes, and I'm sitting here with Whitney Skipworth with First Metro Bank. How you doing, Whitney?
Good, Kenny. How about you?
All right. So Whitney's a good, close personal friend of mine. We've been doing business together for pretty much since you started, Whitney. You started, 2007?
Yep, right at January 2007.
And so, Whitney's been a customer of ours, and we built Whitney several houses, but he's been a great partner with us in helping all of our customers get financed over the last 15 years. And so we just want to come to you today and talk to you about interest rates. We told you last time we talked that we'd be getting together on a monthly basis and just tell you about what's going on in the real estate market, what's going on with interest rates. And so we've got some great news today, because when we were sitting here 30 days ago, rates were over 7%, and yesterday, we had rates in the high fives. Mm-hmm. And so that's what we want to talk about today, is just get you guys acclimated with what's going on with the market. And you're probably sitting there going, rates are keep going up. All I read in the paper is interest rates are going up. And you read all this doom and gloom. So Whitney, talk about that for just a second. If rates are going up, how come mortgage rates are going down?
The biggest, misconception when it comes to mortgage rates versus what we call our bank lending rate, which is the national prime rate, is they're technically not correlated. When you go buy a house, 9 times out of 10, we're going to take it and sell it off into the secondary market. So what that means is it goes into this pool of mortgage-backed securities. So it's not actually tied to the prime lending rate. What you see on the news when the feds come out and they say they're raising rates, they're raising the prime rate, which today is at 7%, and that's what we're basing, a lot of our stuff on the internal bank rates. That is not actually tied to mortgage rates. Mortgage rates are derived each day via what's going on in the stock market and primarily the 10-year Treasury yield. So what we saw in the past week with the midterm elections and stuff, we've seen a lot more consumer confidence. After those, they're not directly tied to the election, but, stock market did well. And in turn, we've seen mortgage rates come back into the, low 6s, high 5%, which, as Kenny said, we're at 7% 30 to 45 days ago.
Yeah. And that's going to be pretty much the case, I think, for the next 6 months to a year. I think rates are going to be kind of like a seesaw effect. Mm-hmm. They're going to go up, they're going to go down, and that's what we talked to all of our, the community last month when we were talking about this is, give us an opportunity to go to work for you. And so we had some people that listened to us, and put some houses under contract, and we were able to get them financed, at 5.9%. Because, we're watching rates. You don't have to watch rates, we're watching rates. And that's what our message is today, is just try to get people to understand that, hey, we're a pro bono employee for you.
With rates, people always ask me, what are rates going to do? They ask you the same thing all the time. I honestly can't tell you for sure, but I have people that email me every day asking about rates. I get a new rate sheet every morning when it comes to, home mortgage rates. And I've had a lot of people sit around and wait, and it ended up costing them more money by what somebody said on the news and stuff like that. The best thing to do is call me or call Kenny and ask what's really going on, because you can get misguided on the reality of things. Like I said earlier, what this rate means versus what this rate means is two totally different things. Being a bank too, we deal with a lot of self-employed customers to where, we can help them and keep some of the loans in-house. Another big thing now, the conventional loan limit is up to $700,000. 5 years ago, it was at $417,000. What that means, it keeps you out of jumbo financing, which, as Kenny will tell you, it costs more to build a house now than it did 5 years ago. So they have raised those limits to where, you go buy a house from Kenny for $700,000, minimum down payment's 5%. Yeah. So all you got to have is a 5% down payment, and it still gets you in that home. We also have lender paid PMI at that amount, so we can just build the PMI into your interest rate, and that way we pay it for you, and you don't have that monthly, probably $250 a month added to your payment. So there's a lot of things out there. It's just talking and kind of figuring out the best option for everybody.
So basically, you can go buy a house up to $700,000 with only 5% down.
Mm-hmm. Well, it could be, I don't have my calculator, say $750. I can loan you up to $700.
And so, like you said, 4 years ago, that was $417,000. And so what that meant is 4 years ago, any house over $417,000, we had to have a 20% down payment. Mm-hmm. And you had to look at jumbo interest rates. Well, now Fannie and Freddie is buying loans. Fannie and Freddie, they're two of the largest mortgage-backed buyers in the nation, and so they're buying loans up to $700,000 with a minimum down payment of 5%.
Right.
So you can get 5% of $700,000.
Yeah, and from what we've read too, of course, they don't call and ask me what I think rates should be every day, but forecast, from what I've read, they're thinking by early to late next year, rates are going to come down even more. We can work with refinancing. I mean, I've refinanced a lot of people before and they hadn't paid any closing costs. So we can work with things like that. We can't predict the future, but I mean, the way things are trending, I mean, looking at, the GDP is kind of leveled out a good bit. Inflation's starting to come down a good bit, what we're seeing for the, in Q4 of finishing out 2022. So things are settling down. But they're not making, especially around here, we're not making any more land. You can know where your subdivisions are and all these prime locations, with the Buc-ee's and all the stuff that's coming out on 65. We can't make any more land. So, if you're kind of on the fence of where you want to be and stuff like that, I wouldn't let the rates, dictate that. Kenny's willing to, like you said, work with you, and we can work with you too to, see what that payment is. And the biggest thing I tell people is call and ask,
Right.
This is what we do. Call me and let me run some numbers. It's free to ask. We don't charge you an application fee or anything like that, and just kind of see where you're at. Pre-approval is good for 120 days, and if you haven't, bought a new car or anything changed in regards to your credit, that's when I have to update a credit reports after 120 days. So, that's what we tell people. Go ahead and get pre-approved. Let's see where everything's at, and then just kind of see what happens. At least be ready to go. Versus sitting on the sidelines and thinking you're ready to go, because, the person that's pre-approved, it's almost like they've got their letter, they're ready to go. Well, first thing Kenny's going to ask is, have you been pre-approved? He's going to talk to the person with the pre-approval letter normally first, because they've already, gone and talked to the bank to make sure everything's good. So I know that's another thing too, is, the intimidation factors. I'm not intimidating. I'm going to talk your finances through with you. Everybody's different, and it's just kind of getting it and laying it all out there and just seeing where you are. Seeing what you can afford and what you're comfortable with, and it kind of gives everybody a lot more consumer confidence once they know that, and then it's going to give them more confidence talking to you and then the realtors, and then just it's going to make the process a lot smoother once you're pre-approved and kind of know where everything's at.
And I think that would be, but my main message to all of our customers, anybody that's looking to buy a house in North Alabama, is, don't listen to the national media. What's going on in Las Vegas, Nevada has no impact on what's going on here in North Alabama. We are following Nashville's trend over the last 30 years. Look it up, read about it. All these jobs are coming here. City of Huntsville has done a great job of recruiting long-term businesses. They're all coming. Toyota, just the impact of Toyota alone, all the tier 2 suppliers, everybody that's going to support Toyota, and the jobs that's going to create is going to be tens of thousands of jobs. Here in just a couple months, where it's going to be confirmed that Space Force is going to be here for Huntsville, Alabama. And so, everybody's sitting around waiting for house prices to dip, or they're not real sure about the interest rates. The house prices are going to be stable. They're probably not going up, but they're certainly not going down. There's going to be a ton of pent-up demand. As soon as they get inflation under control, interest rates are going down. Federal government owes a lot more money than we do.
Right.
All right. They don't want to pay interest any more than we do. And so as soon as they can get rates down, they're going to get rates down. All right. Especially we got a 24 presidential election coming down. Next 12, 18 months, that's going to be a huge topic, is interest rates and how to start getting those interest rates back down. So, there is going to be a bunch of pent up demand, and everybody's going to be sitting there watching rates. So as rates start going, you're going to have a ton more competition. So if you can do 6.5% or 5.9%, which it was today, you don't like it, but you can do it, then do it. And let us pay your closing costs on the front end, and then you save your closing money, a year from now, and when rates drop, you refinance. And so use us as an employee. Like I said, 30 days ago, we were sitting in here and rates were 7%. We thought they were going to go up. 30 days later, they're in the high fives. And so everybody that listened to us last month and went out there and they picked out the house, they picked out the subdivision, we went ahead and got them under contract, and we went to work for them. Well, now their rates are locked in, and we're moving towards a closing date. So give us that opportunity. Pro bono employees right here, 40 years experience. You don't pay anything until we get your house closed. All right, let's get your house under contract, and let's get you with a preferred lender. We have all local lenders. Whitney's been doing this 17 years. Let's put it all on paper. Let's figure out where you got to be payment wise, and let's go to work for you. And let's get you out of that apartment. Let's get you the house that you need. And so that's my message. We're going to continue doing this. We're going to be here again in 30 more days to tell you what's going on. We're going to keep you updated, from now on, for the next several months. And so, Whitney, thank you very much for coming in.
Thanks for having me.
Appreciate your friendship.
Yeah.
Appreciate your partnership. Like I said, we've been together a long time.
I know.
And thanks for coming on set with me today and just talking to the great people of North Alabama, and looking forward to many more years of doing business together. And we're looking forward to working for you. So thanks.